Morning, everyone. Welcome to another edition of Real Talk Live with Real Estate Pros. Excuse me, I'm trying to figure out how to make things work in the new year. John Money McKinley here. Got another great show for y'all today. And I have an expert on today. He has got to be one of the most requests I get for people to be on the show. And his name is Greg West. And if you've seen him before, he is a credit expert. And this is a guy that I get so many requests for to come on the show. And I brought him back on with us today. So with that said, I would like to go ahead and introduce everybody. If you haven't met him, this is Greg West, my go-to credit expert. How you doing on this fine morning, Greg?
Pretty good, man. Glad to be back. Thanks for having me on.
Oh, thank you. I really appreciate you coming on. Like I was telling everybody, you really do. I get emails all the time from people asking questions, and we've got a list of questions we want to go over here on credit, but definitely want to kind of dive deep in today and see what new things you see going on in the world of credit this year. Because we've got a lot of changes going on. We've got a lot of things happening in the wonderful world of financing. If anybody's been out there trying to apply for financing, we've kind of seen how the credit markets have definitely tightened up a little bit here.
Oh, they for sure have. Something I've noticed recently, happened with several clients, is the credit card companies are starting to go risk off a little bit. So if you see some of your cards, the limits being lowered, it's not your fault. They're taking steps to limit their liabilities out there. But I will say, if you're getting higher and higher on your utilization, you're more likely a target to have that done to you. I've seen a lot from Wells Fargo and Bank of America recently.
So what you're saying is the credit card companies are really starting to tighten up on your availability to credit, especially if you start, let's say you have two credit cards, and I'll just use this as an example. You have two credit cards, one with, let's say, $10,000 limit and the other one with $5,000 limit. If you take that one credit card that has the $5,000 limit and get your balance up to about $4,000, the other credit card that has the $10,000 limit may pull back on your availability to credit.
It seems to be the ones you're using. That 5,000 would probably be knocked down to like 4,300, just above what you owe, so that you keep using it. But yeah, they're tightening up.
And we saw a lot of that during the great mortgage meltdown of 2007/2008, which I know I remember that very well. I was in the middle of this business during that time.
Me too. Me too. Yeah, it's very similar. Very similar. They're keeping the stock market propped up, so everybody thinks everything's great. But yeah, it's the exact same scenario going on.
Well, I know that there's a lot going on. We just had the wonderful meeting going on yesterday that was talking about the market and what's going on with the jobs market and inflation. And according to the experts, our most trusted government officials that we all know and trust so well, the job market is smoking hot and the economy is doing incredible.
Yeah, I saw that. Man, here's the thing with government stats. They change the stuff all the time. Like the big ones, the inflation rate. And some people know, but most don't. They don't even include energy and food in there. And that's your two biggest things that are going up. So yeah, inflation rate probably seems low, but not to us who actually go and shop at the grocery store.
Now, wait a minute, Greg. Are you trying to tell me that energy, which we all need to live, whether it's heating and cooling your home or driving to the store to go get that food we're talking about, are you telling me that they have pulled that out of their factors and numbers for inflation today?
They do. Yes, that's correct.
That seems very convenient to make the numbers look better.
Well, 3% looks better than, say, 15 or 20. Sure.
Oh, okay. Well, with that said, I just want to let everybody know, and no, I do not have a crystal ball, but this is what I really like to tell people. If you want to get an idea of what the future of mortgage interest rates are going to be, you really need to take a look at what the Feds are doing, the Federal Reserve, that is. The Fed will telegraph their moves to you on what their plans are. You can listen to the gurus, you can listen to all those other talking heads out there on YouTube, or the gurus in the mortgage industry that have a crystal ball and they know where it's going and they can see the trends and all this other stuff. You really just want to look at what the feds are saying. Look at what these reports are coming out are saying. When we have a hot economy like they're saying, and a great job market like they're saying, that is not going to fare well for our interest rates lowering down. And that's definitely something to keep into consideration. Does that mean we're not going to see a turn in the mortgage market with lower rates in the future? No, we will see that eventually. However, let's be completely honest here. Lower interest rates would be great. I'd love to be able to offer people 3% and 4% interest rates again. That was fun. However, we can't handle that right now because the housing market, like it or not, is still doing quite well across America right now. And if
Yeah.
we have a lower interest rate market, well, guess what that's going to do? That's going to elevate the price of real estate at an even higher level. And in all honesty, I think everybody can agree our real estate values have really gotten out of control.
Oh, for sure they have. Yeah, it's the middle classes are getting priced out pretty much, unless you have two full-time workers, and if you want them to lose their job, then yeah.
I mean, that's what I'm finding a lot when I'm working with a lot of home buyers is typically it's couples because you have to have that two income home to be able to afford housing today.
Yeah.
I mean, it wasn't that long ago when I was in the wonderful world of construction. I was wiring $150,000 homes, and back in the early '90s, that was where the rich folk lived.
Yeah, you can't even get anything for that.
Today, $150,000 home, it might be a little rough neighborhood to live
Right. Yeah.
in.
Yeah. It's totally backwards, man. With the inflation thing and the unemployment, they have to bring pain. They either got to get the rates higher than inflation, which will never happen at this point, or lessen the demand, which is unemployment. That's why it sounds weird, but when you get good job data, you would think it would help things, but it's the exact opposite with the rates. So
Yeah,
uh,
I mean, it is
tough
what it
right
is,
now.
but I mean, unfortunately, we've got to deal with it. Here's the good thing is, and like I tell everybody, when it comes to the world of credit or it comes to the world of home financing and real estate, it's all about who you have in your corner. You want to have a credit expert in your corner. You want to have a mortgage person in your corner. You want to have a real estate expert in your corner if you are in the process of thinking about doing something with real estate, because all of those factors, whether it's your credit, whether it's the financing side, you want to deal with an expert in your corner who's looking out for your best interest and can let you know these are the things you need to do. These are the steps you need to take so you can put yourself in a position to be able to get the best interest rates that are out there at that time and be able to get the best price on a house. And like it or not, your credit reports are a major, major factor. And that's why I'm really grateful that we get to have you on here as a guest every month, being able to share these things with people. And I'd like to also too throw this out there to my viewers. Please, if you have any comments, put them down in the comment question. Ask questions. We are here live. We are taking questions. Greg would love to be able to answer your questions on credit. I'd love to be able to answer any questions you may have on the wonderful world of mortgages.
Yeah, absolutely.
But with that said, I would like to jump into here. I always like to get into a little bit of real estate news because there's always a lot of stuff going on in the world of real estate. And here's something that I thought was very interesting. The Ritz, and if anybody listening or watching my show is familiar with the Woodlands, that's up on the north side of Houston, um, and close to the Conroe area. And we've got a lot of stuff that's been going on up in this area for quite some times, and it looks quite some time, and it looks like the Ritz is coming to the Woodlands. According to the Realty News report, groundbreaking to be determined on the condo community Ritz-Carlton residence of the Woodlands. Project sources have been releasing previews of what's planned. Gracious living on the grand scale. Developer Howard Hughes, which if everybody is not familiar with, Howard Hughes is the one who bought the Woodlands many years ago and is really kind of running everything and trying to take it to the next development level. Let me see here. They have Woodlands comprised of 111 estate-inspired units, 15,000 square feet of private amenities, and 1,200 feet on Lake Woodlands shoreline. The 8-acre site is the largest scale residential site on Lake Woodlands. Now, there's a couple spots where this may be. I go down to the Woodlands Riverwalk quite a bit with my dogs, and they like walking along that area. There's a lot of things to explore and ducks to see, but the ducks never want to come up and offer themselves as a snack for my dogs. I can't figure that out yet, why they don't do that, Greg.
Mystery.
Yeah, I mean, my dogs ask them all the time. They're like, come on up on the shore. We'd love to chat with you. But there is a new development going on that I've seen under construction. There's some big, large cranes up there on the Woodlands waterway, and it sure looks to me like this may be that condo project that they are talking about. I know this article, I think, came out in December, and this project, actually, wait a minute, this came out from February 13th, 2024, because I know there is a development there on the waterway. This may be another second project that's coming along. And according to this article here, it does state that it will not be a hotel. It is going to be strictly a residential facility. So that'll be pretty interesting. And from what the pictures show, this will definitely be on the higher end lifestyle. If I was going to peg dollar amounts on it, I'd probably put them starting at least $1 million.
Yeah, I was going to ask you that. They look pricey. They didn't say on there,
though. You know, when you put the Ritz and then you combine the Woodlands together, that just kind of elevates the whole price tag of the of what you're looking at.
Yeah.
And then, no, that was not the story I wanted. That was not the story I wanted. Why did my stories get out of order here? Okay, let's go ahead and bear with me here. Houston, Texas market. We're looking at Houston market trends on what the Houston housing market is looking like today. And this is back from December of 2023. Houston prices have been up about 3.2% for a median price of $325,000. On average, homes in Houston sell after 42 days on the market compared to 39 days last year. That puts us at, there was 1,612 homes sold in December this year. That's up from 1,593 homes last year. So needless to say, here in the Houston area, we are doing quite well in the world of real estate, Houston and surrounding areas. We seem to have leveled off a little bit, so we're not getting quite as much rapid evaluation on our homes. Seems to have balanced out a little bit. We've also noticed too, at least what I've noticed with some of the clients I've been working with, is sellers now seem to be a little more willing to help out with closing costs, which has been another huge benefit for people. Now, I know you're in the Kentucky area, Greg. What have you been seeing kind of going on in your world of real estate?
The state's pretty steady. I think just in my county alone, Madison County, there's 250 homes for sale, and we're not that populated of an area. Normal house is probably 220 to 250, but we're getting a lot of out-of-towners just buying up stuff, probably because you can get a lot of house for a lot cheaper money than out west or Texas, Florida, places, Pennsylvania, things like that.
Oh yeah, in Kentucky, I mean, $150,000 house, $200,000 house would get you a fairly decent home in Kentucky, I'm assuming, correct?
Oh yeah, you probably get 2,500, 3,000 square feet.
Nice.
Yeah.
Well, if you guys are looking for an affordable place to move to, Kentucky may be it.
also have some of the cheapest power in the country too. For now, they start upgrading the grid from all the new people coming in. But
Really? Plus, you've got all the
yeah,
mountains there too, so it's definitely nice out there in Kentucky.
yeah, mountains in the east, kind of flat in the middle. Then you got all the lakes in the south part.
Nice.
Something for everybody.
Well, here's another interesting article from Norada Real Estate Investments talking about Houston housing market trends forecast for 2024. How is the Houston market currently doing? And according to this, the Houston Association of Realtors, HAR for short, November 2023 market update, single family homes sales across greater Houston area rose by 4.9%, is what they're saying, marking the first increase since March of 2022. The multiple listing service, also called MLS, recorded sales of 6,154 units compared to 5,864 in November 2022. The month's supply climbed from 2.8 to 3.5. However, when compared with pre-pandemic November of 2019, home sales were down 3.2%, totaling 6,359 units. So the market also showed resilience as only homes priced below $150,000 experienced decline compared to 3.5% of the overall market.
That's interesting. Well, people moving out of the areas, I guess. Huh.
Yeah. Now I can say this though. Anybody that has a home for $150,000 and below, I got a whole list of real estate investors who would probably want to talk to you if you're looking at selling it. I'm just throwing that out there. And now I'd like to dive into a feature that we have that I'll let our intro man introduce it.
Now it's time for Real Estate in Space, where only NASA knows if it's real or if it's CGI.
All righty. This is our next segment, Real Estate in Space. And I always like to find some interesting articles from the nice folks in the world of space and our good friends there at NASA. Commercial real estate market in low Earth orbit is heating up. Ah, the commercial real estate market in low Earth orbit is heating up as Voyager Space Holdings, Inc. Normarax plans a new private space station to help replace NASA's existing orbital laboratory. Oh, the planned Star Lab, well, that's an interesting name, will serve government and private customers. It's at least a third such project announced to date following the commercial station plans by Axiom Space Inc. in Sierra Space. Now, here's a question that I do want to throw out there. I want to see the footage of them building this project.
Yeah, I hear you. When you, and I might have some of these numbers because I don't remember them all exactly, but when you sent me this, first thing that came to my mind was how in the world are they going to get that stuff up there? And I was looking at the cost. According to the numbers that are given, supposedly it's like 50 cents a pound, and it's like 200,000 gallons of fuel. I just don't know how this is even feasible. It seems too ambitious. And then you would think the eco people would be going off the rails with all the stuff spent to get 100 pounds in space. I don't know.
Yeah, that's why I always, we always bring the real estate in space because there's always some interesting stuff you read about. They're going to build our last episode, we were talking about the building space residence on the moon. And you look at it and go, where's the cost efficiency in that, even if it's possible?
Yeah. I mean, they say they'll get stuff off. I mean, there's no wood up there. I mean, I don't know what they're going to build stuff out of.
Yeah. Well, here's the next interesting article. Japan, we all know who Japan is. Well, they successfully announced their slim lunar lander. So now we've had the 5th country to reach the surface of the moon. And here's all the people over there celebrating when they did that.
Yeah.
Yep. Aerospace
And
Exploration or Agency, JAXA. Great step forward. Yep, of course. Well, look at that. Look at that little lander there. Isn't that cute? It's got the night.
look at the title underneath of it.
Oh, well, I want photos of this. Oh, there it is. Oh, wait a minute. That's,
That's it.
that's
Yeah.
before the launch. Yeah, that's pretty interesting there.
And that other picture was an artist rendition for some reason.
Oh, why do they have to put the artist renditions? Well, last but not least, I thought I would follow up with this article that I came across before we went live on the show. This is Science Resorts to a Once Unthinkable Solutions to Cool the Planet, Greg. Now, this is very important because there's some people, we don't want to call them conspiracy theorists, but there's some people that seem to think we dump stuff in the heavens. That's what I've heard. Watch the YouTube video. Dumping chemicals into the ocean, spraying salt water into the clouds, injecting reflective particles into the sky, scientists are resorting to once unthinkable techniques to cool the planet because global efforts to check greenhouse gas emissions are failing. Whoa, interesting. Field experiments underway. So now they're saying there's field experiments underway in the U.S. as well as overseas. This month, researchers aboard a ship off the northeastern coast of Australia islands are spraying a briny mixture through high pressure nozzles into the air and attempting to brighten low altitude clouds that form over the ocean. Scientists hope bigger, brighter clouds will reflect sunlight away from the Earth. Shed the ocean surface, cooling waters, Great Barrier Reef, while warming ocean temperatures have contributed to massive coral die-offs. Well, I'm just going to ask this question. If you're throwing all that stuff up in the air to reflect the sun back up top, that stuff will eventually come down, won't it, Greg?
Yeah, yep. Got my own theories on that. That's why a lot of I know my bird baths outside when the water from the rain goes off. There's a red soot in there. I don't know what that is, but yeah, those spray things we're talking about, I remember those in the early 2000s, and they're just finally admitting it, which is, I guess, good. But whatever, 20 years later.
Well, once again, that was Real Estate in Space, one of our episodes we like to wrap up the news section with. But now I'd like to get into the some of the credit questions because we do get a lot of credit questions. First question that we have today is, how do credit inquiries affect my credit score, Greg? I get that question all the time when somebody wants to figure out if they can get a mortgage and want to figure out what the numbers are. You're not going to pull my credit, are you? You're not going to pull my credit. I don't want my credit messed with. Tell us realistically, what do inquiries do for you? How can you get good inquiries? Or I shouldn't say good, but how can you go apply for credit without getting your score dropped tremendously?
Yeah, I'll get into that, but first I want to say I'm not a financial advisor. Do your own research on stuff. It's just my experience and what I've been doing for 20 plus years. But as far as inquiries, they are supposedly 10% of the FICO scoring model, meaning they have a pretty substantial impact, especially if you get too many. An inquiry will stay on there for 2 years. There are two different types. Well, more than two, but the two you'll hear a lot are what they call soft inquiries and hard inquiries. If they do a soft inquiry, that does not impact your credit score. It's only the hard inquiries that do. And generally, on average, from what I've seen, each inquiry is about 3 to 8 points, although I have seen an instance of 40 before. Hopefully that's rare, but and what's supposed to happen, like especially with car dealers are horrible for this. If you go to try to buy a car, you'll have 5, 6, 7 inquiries, and your score drops 30, 50 points. That's why. They're each one of those inquiries is hurting you, although they're supposed to count the whole package as one. But from what I've seen, that doesn't appear to be the case very often. But the good news is the older they get, the less they hurt you, but they'll start sending up red flags if you get 2 or 3 inquiries in like a 90 to 120 day period. So you want to keep the checking of your credit to a minimum as far as getting loans. Like I would suggest, if like in the case of a car, get an approval from a bank first instead of having them go and pull your credit all over town, because a lot of those car dealers will make interest on the back end too, with the rate. So they'll shop you around.
Oh,
yeah, they make a big difference.
That's like I let people know too, because I'm a mortgage banker. When I pull your credit, I'm only pulling it once. We're not doing multiple inquiries. We are the bank. We have our in-house underwriting. And, you don't want your credit pulled multiple times. And the problem with a lot of the car dealers is they're not the lender. They're just brokering those deals out. And that's why I recommend to people, you just want to find it. If you want to get multiple offers on mortgage, that's fine. But really talk to several different mortgage people. Find the 1 or 2 that you're comfortable with, and let that mortgage professional go ahead and pull your credit and put together a good game plan for you, so you can see what your options are without having to worry about 10, 15 inquiries.
Yeah. Another technique, or I call it a hack, is there's a lot of things going out there about small business loans using credit cards. So you can apply for multiple cards, and if you can, like say you need 3 or 4, try to get it to where you're only getting like 1 inquiry on each agency, because credit cards usually only pull 1. So it's a kind of way to avoid getting too many on one. So there's all kinds of neat things you can do with it. That's just some of the little techniques you can use to optimize scores later on.
Oh, okay. And our next question is, let me see here. Oh, how often should I check my credit report for errors? And that was asked by Miss Taylor, or could be Mr. Taylor, one of the two. How often should people take a look at their credit, Greg, so they can see if there's any issues going on with it?
I mean, as often as you want. Before the internet became so popular, once a year was sufficient. But so many scams going on. There's so many places like annualcreditreport.com that you can check, get a free report once a week now. So really just as often as you want to check it. It's probably a good idea at least every few months, 6 months, somewhere around there. Depends how much free time you've got.
Okay. Where would the best place to go to check your credit report would you advise people to? Now, I do want to preface this before you tell us that, though, is that's one thing a lot of people don't understand, because I get this a lot. Well, I just pulled all 3 of my credit reports. Let me send them to you, John. I'm like, it's not going to do me any good. But mine have a score. The problem with pulling your own credit reports is not the fact you can look for errors and mistakes. It's the fact that the majority of time, the credit score you're getting from that provider is nothing more than a consumer credit score. It's not the same credit score that someone like me in the mortgage world uses to have a loan determination on what programs we can offer you.
Exactly right. That's why I think Experience one that does that pretty well. There's different. They'll have a score for mortgage, score for car, FICO 8. Now, I mean, there's all kinds of versions. But annualcreditreport.com is the actual official site set up when they passed the FACT Act. I think it's 2008-ish or so, which entitles you to free reports. And really, the scores, as you just pointed out, aren't that important. I mean, you can buy it, but they're going to have to pull you anyway. So it's just good to get a general area of where you're at. Now, I will warn you, though, with like Credit Karma, Credit Sesame, Credit Wise, and there's probably more. They use a Vantage scoring model, and that's completely different than FICO. So I don't even pay any attention to those scores at all. And they're very popular, especially Credit Karma.
That seems to be the biggest one that I get when people call me. I got my Credit Karma, and I'm like, look, that's nice. That just gives you a kind of a barometer, but that is not a real credit score. That's just a credit score that they put together for you.
It's not, and also it's very difficult to find because the items that you pay off, like you have a collection or something, you think you're going to get it, pay it off and get it deleted, which is not usually the case. They don't show them on Credit Karma. You got to dig around to find them, so it makes people believe that they're actually gone when they're not as well. But it's free. I mean, Credit Karma serves its purpose, but definitely don't take it as gospel with your credit stuff.
Okay. And then we have another question here is, can consolidating my debt help improve my credit? And that was asked by Ben.
Absolutely. Yeah, especially depending on what type it is. If it's mainly credit card debt, then yeah, you'll get a significant boost. The credit cards are 30% of your score, the utilization rate is. So if you get those paid down to 10%, zero less, and your utilization is less than 10%, you could see I've seen it go up 50 to 100 points just from that. I mean, it's nearly a third of the score. Now, if you're consolidating like installment loans, like furniture payments, cars, you may not see as big of a boost because what's going on there is you're lowering your debt, but you're also closing some of your accounts, which could, like if you have a car note that was 5, 6 years old, you're closing a 5, 6 year old account, that will impact you a little bit on your length of credit history. So, answer your question, yes, overall it's probably good, but credit cards are special.
And that's one thing too that I've noticed with a lot of things going on is a lot of people, you know, we've had, let's be honest, all kidding aside, we've definitely had some rapid inflation going on for a while. And unfortunately, a lot of people had to resort for credit cards for a little bit just to make it through as we've all had to adjust to the different economic times. You know, when you go to the grocery store, it used to cost you $100 and now it's costing you $175. It takes a little bit of adjusting on how to adjust lifestyles. So unfortunately, some folks had to put some of their expenses on credit cards, and now that they've got everything balanced out, they're looking for a solution. And I always tell people a good source to look for a solution is if you're a homeowner, take a look and see what the equity in your home is. That's the one good thing I really like about Texas with cash outs is like in other states, you can go to another state and get a loan to value above 80% on a cash out home. If you get a cash out of your home. Well, Texas has a law in place that doesn't allow you to take out more than 80% loan to value, which is a great thing because if you have enough equity in your home, you can pull some of that equity out on the lower tax deductible interest that you're going to pay on that mortgage, pay off your other credit card debts. And yes, your mortgage payment may be going up a little bit because you're going to a higher interest rate and a bigger loan, a larger loan amount. But if you're eliminating $600, $700, $800, $1,000 worth of unsecured credit card debt and other debt, you're virtually saving almost thousands of dollars a month. And in some cases, I've helped people save over $1,000 a month with just a simple debt consolidation loan. And not debt consolidation where you're combining everything together. I'm talking about we wipe out their credit card debt.
Yeah, nice. Yeah, that's a good solution if your scores are in a position to do so.
Exactly. And I always advise that to people. You know, it doesn't hurt. It doesn't cost a dime for someone like myself to take a look at your situation and run numbers for you and let you make an informed decision if it's a choice you want to work with. And those are the people you want to work with. You want to have the experts in your corner who aren't trying to sell you something. They're trying to actually be there to provide solutions for you. But at the end of the day, you have to make the choice. You have to have enough information to be able to make a good choice on what to do with your future.
And I would add to that, if you are thinking of doing that, and you see that you are going backwards monthly because you keep adding to the cards and your utilization rate keeps going up and up and up, eventually it's going to hit a point where it's going to impact your score so severely that you'll be too low to actually be able to do such a thing, and you've lost your opportunity. So if you're in that situation, you might want to look at doing something sooner rather than later. There's a big difference between 20% utilization and 50. And then you get to 60, and then you're high risk, you're going in the low 600s, high fives, you know, your credit's perfect. Your debt's getting overloaded with the credit cards.
Exactly. I mean, what would you say the credit reporting agencies want to see you at to maximize your score as far as debt ratio? What would you say as far as utilization?
Man, the experts, and I use that term kind of loosely, say 30% is the high. But I've seen it impact you as soon as it crosses 10. From an own personal story of mine, I remember years and years ago, I was at 8% credit card utilization, and I had a situation come up with some college stuff and whatever with the kids, but it jumped up to 22%. And my score went down 40 points. Now it recovered when I went back down below 10, so I'm pretty confident every 10% you hit, you're losing score. So I tell people 20 is the maximum I would have it. Once you start going to hit 30, it really starts taking a beating. 40. If you're above 50 and 60, you might be getting into too late zone. Come out of it to borrow your way out of it, I guess.
Exactly. You just have to put your head down and figure out how to pay off that debt because let's be honest, and this is something I encourage all of my listeners to do. Take a look at your recent credit card statements. If you have credit card debt, take a look and see what the interest rates have jumped up to since we've had all this increase from the feds on the short-term interest rates, because that is directly affected on the credit cards you have. That's something that people need to understand. You could be paying almost 30% interest right now on credit cards.
Yeah, a lot of them are. They're in that range. I had something and I had already lost my mind. What I was going to say. Anyway, sorry. Go ahead.
No, not a problem. Not a problem. Well, Greg,
I remember what it was.
Go ahead.
There's so much misunderstanding on the debt. The debt does matter, but with credit card debt, there's a big difference. Like if you have a guy that only has $5,000 worth of credit limits to access, and you have another guy that has 100,000 he can access. Well, the guy that has 5,000 in access, he owes 4, so he's at 80%. He doesn't owe a lot, but his score is getting crushed because it's at 80%. Whereas the guy that has access to 100,000, he can hit 20 grand, and it doesn't affect him very much. It's not fair, but that's the way the system is, and a lot of people don't understand because a lot of them will have a lot of credit cards with small limits, and they know it's not a lot of debt, but they're being punished more severely because it doesn't matter how much it is; it's how much you use according to what you have access to.
Oh, okay. Well, Greg, we're approaching our time here, and I have really enjoyed having you on the show today. Oops, and that's not what I wanted. Sorry about that. Sorry about that. I'm still trying to figure out. Everybody, just so you know, I've just got my new studio set up, and I still have a little bugs that I'm working on getting corrected. So I hope everybody can bear with me. I'm going to get the polish out and the sander out and get this.
Yeah, looks good.
Get this show polished up a little bit for future broadcast.
You have to pay your guy overtime for the extra.
So, but I wanted to share this with everybody. This is how you can get a hold of Greg very easily. West Credit Services, optimize your credit score. I am going to strongly recommend if you have credit questions, reach out to Greg. He will walk you through. He will take a look at what your situation is. He's not going to ask you for $1 to talk to you. If you've got some questions and you've got some concerns with your credit, it doesn't hurt to reach out to him. And right here is Greg's direct number. It's 859-625-4546. I strongly encourage you to reach out to Greg if you've got any credit questions or you've got some stuff that you think you need to work on.
Yeah, and I'm not a big corporation. You'll talk with me. And if I can't help you, I'll push in the direction of what you need. But sometimes it's better to have John help you with the refinance or, God forbid, a bankruptcy. I mean, every situation is different. That's why there's not one good answer for any particular question. Everybody's got their own solution based on what's going on with them. And I'll help you out with that.
Well, perfect. Well, I appreciate everybody being here today, watching Real Talk with Real Estate Pros. And as always, we're on every Wednesday at 11:30 a.m. live shows. I just ask that you please go ahead and like, subscribe, and share. And if you know any real estate experts in or around the Houston area, surrounding areas, heck, all over the state of Texas, please let me know. My text number is right up there at the top, the 281-560-4965. Shoot me a text with their contact information. I'd love to chat with them and have them on the show. And with that said, y'all have a great week. Greg, I really appreciate having you on today. And as always, don't forget to Greg, I appreciate you, brother. Have a good one.